Hey friends, Lucian here with the Bullish Bears team. Wanted to make this video on the three black crows candlestick pattern. What do black crows mean? Well, three black crows is a bearish candlestick pattern that is used to predict the reversal of the current uptrend. This pattern consists of three consecutive long-bodied candles that have opened within the real body of the previous candle and closed lower than the previous candle. Oftentimes, traders use the indicator in conjunction with other technical indicators or chart patterns as confirmation of a reversal, right? So here is what Investopedia shows as a three black crows pattern. Obviously, opened in the previous body, closed below it. Opened in the previous body, closed below. Now, as we all know, charts don't always look this perfect. There's sometimes going to be something off a little bit about them, and that's where I like to show people the real world, because it's important to know the overall concept of what's happening, not exactly is it 100% identifiable. So that's why it's very important when you see all of our other videos and stuff, you'll see things like dojis. There's different types of dojis, right? Dojis also can look like spinning tops as well. So, like we tell people, or hammers could look like dojis or spinning tops. So my point being in all that is, again, just remember, identify what the overall pattern is trying to do. Again, look at the candlestick, then look at the patterns, look at the overall grand scheme of things, and then kind of put it together. We try to tell people, don't get stuck in the minutia, because that'll be what bears, kind of bogs you down, right? I'm going to show you some examples of that. This three black crows pattern right here, really great an example of a three black crows. Now, if I zoom in here, you'll see this candle opened in the previous candle, right? But this one, I guess this one is. I'm going to show you when this one just barely opened in the other one, but it kind of pierced up in here. So someone can say, well, if you kind of draw a line across, is it right? Is it totally in there? It's kind of close. This is where we say, don't bog yourself down. Three big red candles, right? It's signifying the stock went up. You had a bull flag. So you had, look back over here, right? Big uptrend. This is the S&P, right? Lots of clues, lots of patterns in here. Prices moving up. Then you get, again, watch our other videos. You're going to see videos on all of these clues on what was happening, right? So a reversal, you were getting warning signs up here with the spinning tops, bearish harami, formed a head and shoulders pattern, then massive candles down to a bear flag, which then turned in, right, to like a bull flag pattern, all hovering around these moving average lines, moved up, so bull flag up. Now you can see kind of an engulfing pattern here, a bearish engulfing pattern. And now what's happening, it's signaling a potential head with a left shoulder that if it gets a bounce and fails these EMAs, it might be another head and shoulders, right? So patterns, so important to learn, but look at this pattern, three big red candlesticks signifying a potential reversal of the trend. Now, something also very important to keep aware of, be aware of, it's not a rule, but be aware of a 3-day rule, right? When a stock goes up or down for 3 days, if a stock goes up 3 days in a row, look for the potential shorts to start to come in. If a stock falls for 3 days, look for the buyers to come back in. Sometimes you're, again, going to get a 4th or a 5th day, but just be very aware. And as you can see right here, 3 big red days. Now you're starting to see potential buyers coming in. There might be dojis, not saying it can't fall, but just remember, look, there's a support line right here, right? So there's no coincidence why stocks do what they do. Support and resistance and candlesticks and moving average lines are the name of the game. So as you can see, 3 big red candles map out support and resistance lines. Notice the patterns. And right here, I don't know what this stock's going to do, but I am very aware of a real big head right here, a clearly defined left shoulder. I can see a neckline right here. If this thing bounces back up and if it falls below that 2755 area, that left shoulder, or right around that 2750s, right these EMAs here, if price jumps up and fails these EMAs, you're going to have a pretty clearly defined head and shoulders pattern with this base here, right? So I show you all these things because it's so important to look at the big picture. Look at these patterns within the pattern. And as you can see, 3 black crows here. That's not a good sign. That's very bearish. Let's look at some other examples here. Citigroup, C. Let's see if you guys notice something about this one. What? Look at this, right? Citigroup doing the same exact thing as the S&P. No coincidence, right? These stocks many of times run with the markets. Now it's with a bank, the banks as well. There could be indecision. Sometimes, the banks might go up, again, depending on the sector and the news and all that kind of stuff. But you got to be aware of, again, look at this. 3 black crows. Now you're getting a doji. It's not really a green one, but it's kind of a doji or a top. Again, look down here, support level. This 200 SMA, people are very aware of it. So look at support and resistance lines. Look at what's actually happening. As you can see, basically 3 black crows. Again, it might not go completely perfect into the body of the previous one. Sometimes it does. But again, even if it's like kind of they're all even, still showing you the same thing. 3 big red bearish candles. Let's go and take a look at Goldman Sachs, GS. All right, so there's perfect example. So I'm actually going to wait on that one and go back to this one over here. You're going to see over here 3 black crows, right? Very similar. Let me go back here again. Where did it go? There it is, right? Let me zoom out a little bit. So price is falling. So this opened in the previous candle. This one right here. So again, perfect example, right? This one did not open in the previous candle. It did go into the previous candle, but it doesn't necessarily matter. It's telling you the same story. 3 big red bearish candles. Now you can see here, the buyers tried to come in with this little doji here. 3 green, 3 red days. Again, sometimes you might get a 4th or a 5th day. It's not a complete rule that works 100% of the time, but be aware of it. After 3 green days or 3 red days, look for the potential buyers to come in. They kind of tried to stop it down over here, got a little bit of a bounce, and then kind of continued downwards, right? So let's flash forward. Goldman Sachs. Notice a very similar pattern. Look at this. 3 black crows. Goldman Sachs, I just showed you Citigroup, and I just showed you the SPX. All very similar patterns. Many of these big stocks run with the market, and it's no coincidence. So learn these patterns, and you can learn the markets, and look at very similar pattern. Head, left shoulder, right? Kind of a baseline down over here, running very similar to the S&P and Citigroup. And you can see kind of a doji or a top candle being formed here to show indecision. If it gets a pop and fails these EMAs, that's another perfect looking head and shoulders, right? Very important to watch these patterns. Let's take a look at PRAA. Where is that one? Back there. So let's zoom back here. 3 black crows. So again, you can kind of zoom out a little bit and see this candle opened within the previous candle. This one did not. It touched in a little bit smaller of a candle, but again, be very, very aware of its 3 red candles, signifying a potential reversal. Look at what happened on the 4th day. Buyers tried to come in, created these dojis, and then it went up, right? You can see right here, I'll get into other video, basically 3 advancing soldiers. Not perfect. This one opened in this previous candle. This one didn't quite, but again, 3 candlesticks, kind of somewhat larger bodied, not completely totally large, but be aware, then you'll have, this one actually went up a few more days, and then you had the reversal. So again, be aware. See this perfect example. 3 green days. Look at the shorts tried to come in over here. Again, they don't always work, but they're very aware of those 3-day rules. Just like 3 days here with the 3 red candlesticks, the buyers are trying to come back in. No coincidence as to why that's happening. Let's take a look at HCP. All right, we'll go back here to, there we go. I'll zoom in here. So again, not perfect, right? This candlestick did not open in that one, but it got a tiny bit into it. This one kind of fell further, didn't go up into the real body, but look, 3 red days. And as you can see here, there was some indecision, right? 3 red days. What's going to happen? Created these dojis of indecision. Obviously, you got to look, at price. It's oversold. It's bear flagging right here. If these EMAs reject, that's a bad thing. And well, here you go, right? So it doesn't mean that it's going to go back up again when the buyers start to come back in. You just got to watch these patterns. So very important. Let's take a look at one more here. Let's look at BAX. Let's go back over here. There we go. That's a really nice looking one. Still not completely perfect, but 3 big red candles, right? Red candle. This one didn't go and open up really inside of this candle, but it got up in there. It kind of pierced it a little bit. This one did. 3 black crows. Look at what happened here on the 4th day. Buyers tried to come back in, got kind of the spinning top kind of pattern. These indecisions popped up a little bit, and then it faded, right? Be aware of this. After 3 green and 3 red days, very important to see if the reversal is going to pop.